how are you now? Broadcasting from the studios of Sydney and Gadigal country, it's the Theory of Thing podcast, season 8, episode 8. Remember, if it's talked about enough, it's a thing. Looking back on a week in which the market February, panic still sticking with the S&P 500, was only 20% coming. How are you now? James Whelan, Managing Director of the Australian Mutual Funds Exchange, coming to you with the expertise of many years in the industry to talk to you about India, the investment case for India, everything around it and surrounds it, sort of to see some angles and maybe talk about how to be able to invest in India as well, with some ideas again. So if you're keen on getting into the emerging market space or keen on diversifying the emerging market space, if you're keen on anything at all, stick around, stay tuned. If not, stick around anyway and you might learn something about one of the fastest growing countries in the world. Very exciting, but it's also how they're growing and what they're growing and what they're going into as well. Very exciting. Look, I've got a presentation. All I've done is just go through and just pick out some bits and pieces from paper over the course of a couple of weeks. This is just basically what I found the most cursory searches, and I'm just going to go into some of the details for India as well. Easily top of the list as an investment case. India fast becoming the China you can deal with as tougher restrictions fall on companies dealing into China, along with more ethical questions about dealing there in China, that is, specifically. Meanwhile, India continues to open the doors to global companies. Samsung, LG, Hyundai, Foxconn, Google, all with ambitious yet realistic plans for Indian expansion. Now, labour laws are also on the change as well. There is more assistance coming in that regard with foreign investment in the country. So it's actually changing the shape of the country. For the better, for the worse, for the better, I do believe. Add to this, now my job isn't to make a decision on this. My job is just to tell you the facts and tell you how the investment case is going to sit for this one. But anyway, I'm going to also talk about the systematic investment plans that happen in India and how they are burgeoning and the burgeoning middle class with the growth of those funds into Indian mutual funds. We'll get into that in just a second. So there is a problem again, and then I'll tell you what the biggest problem that happens with India is about the access to it. Look, let's have a look at this. We're talking about massive, I'll go to the slide, massive infrastructure spend. What I'm going to do, actually, let me just pull this up because I'm going to get myself on here as well so that you can see me talking as well. Hello. Great. Now, the plans that we've got here talking about Indians with huge renewable spending and huge infrastructure spending as well. $122 billion to be spent over the next couple of, for the fiscal year over the next year. So $122 billion in infrastructure. I think India needs some infrastructure spending, no doubt about it. Moving on, this one, let's see how we go. Yes, excellent, it's working. I love it when technology works, isn't it great? India has a booming young population. It is absolutely, it's growing leaps and bounds. They're booming into infrastructure. So I'm just going to pull up this. This is from the FT that you can see in front of you here, talking about the young population. Let's get my head off there. The confidence of that. So now there was the stat that was here. Half of India's population is aged under 30, while the average first-time home buyer is aged 37 to 38. So there's a huge number of houses that need to be bought. They're talking about the number of loans that are. There's a low debt rate, and that is actually going to be growing. So that's actually a really good thing for an economy to get up into that more higher debt. You get more people, more jobs, more money, owning a house, filling it with stuff, getting into debt, continuing this beautiful cycle of growth. Economies need that to be able to survive and live, and India is absolutely heading in the right direction. There's a less of a fear of borrowing money as well, which is fantastic. Now here is what they were talking about. Oh no, they're talking about interest rates, so don't worry about that. Now let's just talk about some of the investment cases. I need to be able to switch. That's quicker. Okay, that's good. Submarines. Now, India is the world's largest importer of weapons, of arms. Now, good thing or bad thing, like I said, not my job to really go into that. However, phenomenal that they actually are. Now, this is them talking about, I'm going to get into this right now and talk about it. The US wants a bigger piece of that action because right now a majority of their weapons are imported from Russia. Russia is the biggest supplier of weapons. So they're the world's biggest importer, and Russia is their biggest supplier. That's a bit of a problem because US companies really do prefer to have US backing in the militaristically. I'm trying to say sort of the alignment of a country needs to be working with at a militaristically, I suppose I want to say, in that one, i.e., you can't have Russian jets in your airfield if Google wants to go over and do business there in a big way or a bigger way. That alignment sort of comes more towards an alliance, and it does seem like they're very aligned with Russia and China. But the good thing about India is that they have the chance to be able to do that. Geopolitics aside, and that's not really what I want to go into here, but there is some huge money being spent on weapons, and Russia is dropping down that list or in that size of Indian purchases. Now, the US is rising up that ranks, but here's just an example of Germany potentially going to, ThyssenKrupp submarine going to be selling them the subs, which is fantastic. So this is just a beautiful little example here of some of the stuff I was talking about. Back to the slides now. Micron, $1 billion deal goes into here, talking about India chip packaging plant. Extraordinary, and going into the chips as well. India wants to be producing its first semiconductors within the next year and a half. Extraordinary that they're going to be moving into that regard. So they've always been big on the services. India now sort of going to be moving more into that more specifically in that tech space. But it's also a space that, again, like I'm saying, the trouble with China is that it has so much power and control in this, and that was very difficult to wield it away. Ever since 2016, it's been sort of obviously a hot topic about what they're supplying, how they're supplying it. Can we trust the Chinese chips? I think that there was a story about Sweden bought Volvo cars from China, and now because it was for the government, this is only a couple of days ago, but because the government agency was the one that bought it, they're now questioning whether they could be able to talk about government work from inside the car because it was built in China. So this is now the situation that you're in. You can't even trust the car that you're sitting in to be able to not be a spy tool. That's how much trust there is with regards to China. Doesn't exist in the direction of India, which is sort of what I was talking about. Companies being able to go to India and to invest in India. So look, that's all going to go. I'm not going to sit here and just show you articles out of the Financial Times, but it's just, these are beautiful examples of just exactly what it is I'm talking about. How India really is growing. There's me again. How are you going? This is cool. 500 jets to go to Indigo. That's a huge purchase, and that just shows not only that they are spending money on what's outside, which is great. So Airbus got that contract. I'll get my face off here so that you can actually see what's going on. So Airbus has got that contract. The blockbuster deal surpassed the record set in February when Air India purchased 470 planes from Airbus and Boeing. Not only does this represent India growing, India buying things from other companies. That's pretty obvious, but it is very important. But it also talks about sort of what growth projections they have for their own country, and that's, you know, a growing middle class is the main fact that I want you to come away from here with regards to India and from the investment case. The $13 billion cloud services investment from Amazon as well, one of the largest ones going in there. I'm not going to go into the details. So yeah, I'm not going to show you the newspaper articles on these ones. You can see exactly what you need to see. Now, this is what I was talking about. America hopes that India's Prime Minister will sign a range of agreements on defence during his state visit to America now, this was back in June or July, I think it was, and that was interesting. That visit that Narendra Modi made to the US. If we want to talk about ethics, so this is always the good with the bad. Narendra Modi was actually not allowed to go to Washington many years ago because of some human rights questions that were raised. And I'm not going to go into the details on these bits and pieces. However, it is funny that since that time has come, that now India has been seen as such a necessary ally to the US. He has actually now been able to speak to joint sitting of Congress twice. That's an honor that only gets reserved for the absolute heroes of international heroes, or people that they really want to align themselves with in the eyes of the US. That's a big deal, and that was seen by the world as a real show, a real sign of respect, and a real sign that we want to be friends with you from the US. There's a reason for that. The US makes so much money out of selling weapons that they need India to switch across there. But it's not just weaponry as well, because then also, like I said, if you've got that alignment through the military and know that we're working in the same direction in this sense, I'm not going to go too deeply into the bits and pieces, then it means that US companies can have more comfort, and also countries that are aligned to the US have more confidence to be able to invest themselves and their time and their people and products into India as well, knowing that sort of you've got this dome that sits over the top of you. You sort of understand where I'm going this one without going in too deeply about military and who's right and who's wrong in bits and pieces. But it is, like I said, imagine you're a Google and you want to be able to say, okay, we're going to put Amazon, you're going to put a $13 billion cloud computing plant, a number of plants that are through India. Would you rather do it if they only are aligned with Russia militarily, or would you rather that they had US backing as well? That you can sort of see where I'm going with this one. So, shifting on. Very cool. The projected population of India is now the largest, most populous country in the world. Congratulations. But these are talking about sort of where the middle class is as well, and relative GDP per head. So look at the India. This is amazing. So India down the bottom here, and I'm just going to sort of put my cursor over it. You can see India down the bottom here just raising up its GDP per head from a purchasing power level. That's amazing. You see other emerging economies, so Russia's staying flat, going down, Mexico staying flat, going down, Brazil staying flat, going down. It's Indonesia, it's China, it's India, and a little bit Turkey as well, about just exactly how GDP per head. Now that's a really important one, because the ability to buy stuff as it grows is just sort of regular things. Like I said with housing, fill it with stuff and go from there. But it's also being in the banking system. It's also being able to invest. Now I'm going to get to that in a second. Growing middle class, a bit more money in your pocket, a bit more money to invest and save and to go forward. You sort of see where I'm going with this one. I'll get to it in just a sec. This is the crossover date. That was very cool about the situation there. Now, okay, I'm going to get my face off this one, because there you go. Here it comes. You ready? Look at this. India through around the world with Biden, sensational. With our Prime Minister, Albanese. With, I think that's G20. I'm pretty sure that one is. It's fantastic. However, this is showing exactly how powerful India really are and how much people are desperate to see them around the world. But he's been photographed and he's aligned with all of these people that are here. He's still been photographed with those guys over there as well. The people that people would see, that maybe you don't want to be photographed with them right now, and maybe you don't want to be holding their hands and smiling at this particular time. But the other countries don't care, which is a real sign of respect to exactly how strong India is economically. That's a really nice one. Now, also China, I'm seeing China not necessarily being in decline, but definitely not growing at the same pace that it has done in the past. I see that the investment case for China isn't as strong as it has been in the past, and here's sort of some of the reasons, some examples of that as well. Chinese stimulus since 2020 has not matched past events. People really did think that them coming out of COVID was going to be a huge boon. I was one of them, and I've been let down by that as well. And that's sort of where I had to go and find somewhere else that I wanted to invest, and that's why I found India, and the Indian case just made so much sense to me. China's new home prices are poised for the longest losing streak since records began in 2011. A lot of people own a place, and there's a lot more money sort of going out the back door. So whilst I showed you that India keeps on growing in that regard, more people, more debt, more lending, more accessibility to debt, more people in the banking system, China seems to be really struggling to get this thing back under control. Moving on from there. Now, here comes the fun part. India is a closed market. You can't just go into your trading platform, wherever you are. I'm going to get my face back up here again. Hello. You can't just go back into your trading platform and just go, you know what, I really like that. I'm going to go and buy Adani. We've all heard of Adani. Don't worry about the details behind it. But you can't do that. You have to find some other way of going about it. Now, there's lots of different ways of going about it. We're going to get to that in just a second. Now, I will get to the accessibility in just a second, but let's have a look at this one here now. So, SIP, systematic investment plans. What's an SIP? A lot of people ask me this. A systematic investment plan is a little bit like our super fund. A little bit like our super system here in Australia. For anyone in Australia sort of understands how it works. We've got, sort of a forced savings, except it's not forced. So we've got forced savings by an employer that goes into a superannuation fund. It goes into a savings account for your pension, for your retirement. And it pays about 10 to 11 to 12% per month of what you make, and it gets sort of matched and put in by your employer. It's all this amazing sort of forced savings thing that we have in Australia. That mostly buys Australian stocks and Australian equities, which is good. It sort of provides this really nice base underneath the Australian market. So it's a good part of the investment case for Australia as sort of a good default. India has this as well, except it's like on steroids, if you can imagine exactly how it is. It's small amounts mostly. Let's just see exactly what it is here. So first off, 1 crore equals 10 million rupee, which is about 179,000 Aussie dollars. So about $180,000 here. So systematic investment plan contributions have increased from 92. I'm not doing this. 92,000. Crore still confuses me, and I do apologize to our team in India that tried to explain it to me. It's not going to happen, guys. I'm sorry. However, they have increased from that number to that other number in 5 years. That's a 53% increase in 5 years in the number, in the amount of contributions going into SIPs. The number of SIP accounts has increased from 52 million to 62 million. That's a lot. So it's about 50, what is it, 58% or something was there. I had the numbers at the beginning. But it's middle class. It's people in India who are making money and earning money, setting up a simple plan and saying that every month when I get paid, it's going to take some of that pay and it's going to automatically put it into the market. And the market in India, this is the thing, is mostly, it's investing mostly in those mutual funds. Those mutual funds own mostly Indian stocks. Those Indian stocks are in the managed fund, in the mutual funds. As those Indian stocks get bought, those mutual funds, just on a net asset valuation basis, also then do go up, and everything just keeps on spinning. You can sort of see, if you can understand that, then that's fantastic. Now, let's go back to India and how difficult it is to invest over there. You need to open a depository account. You need to open a trading account, open bank accounts. You get to appoint a tax advisor. I'm not going to go into the absolute depth of these ones because that's our intellectual property. You need to obtain registration licenses, and you need to comply with a whole bunch of KYC as well. It's hard, and you need to do this on an individual basis. So you can't just go and click a button and get access to go directly into Indian stocks. Like I said, very difficult to do so. Now, go back to the SIPs. Tradable. Why is it tradable? Look, the funds, like I said, the mutual funds in India own the stocks, and then when the SIPs go into the funds buy the stocks, and the stocks go up and the funds go up, and everything keeps on spinning. The SIPs keep on investing and it keeps on going. The returns, not only because India is, okay, you know what, I'm going to take a step back. There's an expression in markets that the market isn't the economy. So, and we've had this a lot, that you could have an economy that's going great, but their stock market isn't. Or you could have a stock market that's going great, completely contrary to what's going on underlying the economy. I.e., take America, for example, which has gone, people have been predicting a recession all year, but look at what the stock market has done in the US. It's gone absolutely gangbusters. There's no real link between those two things. So in India, you can say that, yes, the stock market has gone up, but it's not necessarily because of the economy. However, in this case, it actually is, because as the Indian economy is growing, those systematic investment plans are growing, and that money flow is going into the market. So yes, it is linked together with these ones, which isn't really the same way that a lot of other developed markets are operating. China was very much the same sort of situation a few years ago. India is sort of the next China. Like I said, the China you can deal with. So these are some examples of some flows that are going into it. Yep, $3.5 trillion economy, 4 submarines, largest arms importer in the world. Let's go through some other things. So mortgage rates, 9 to 14%, which is fantastic. Not really. It's a little bit more than what I'm paying here. My year-on-year lending has gone up. Housing loans, story about that. The average household size of 4.4 people, nice. And it's the 5th largest economy in the world. It's expected to be about 3rd, I think, in a few years' time, and then 1st potentially by 2050, I think was the number that we had going on there as well. Now, what is AMFEX? It's a good question. Thank you for asking. What exactly is AMFEX, the Australian Mutual Fund Exchange? We are a one-for-one. It's a CFD over any mutual fund in the world. So not just India. We have India. Fantastic. But over any mutual fund in the world. Australia, America, take your pick. It's there. If it's not there, we can add it in, which is sort of, we got the access to be able to do that. It's all unleveraged, so it's CFD. So because it's often so difficult for individuals to get mutual funds and mutual fund access in different parts of the world. You need a system that actually allows you to do it. So what we do is it's a simple one-for-one CFD. So it is a CFD platform. However, it's unleveraged. And any news about CFDs, don't worry about it. It's unleveraged. It's a one-for-one, and we are 100% hedged as well. So the money goes in, we buy it for you, we put the CFD on the top of it, and you effectively have the same amount of market up and down that you would just by owning the managed fund, which is, like I said, difficult to do, the mutual fund. We have an app which is available on your phone, your desktop, anywhere that you want it to be, on your tablet, local and international support. You're talking to one of them here. And it's also the ability to be white labeled as well if you're that way. And it's got access to India, which is fantastic. Moving on from there. Now, what I'm going to do, instead of showing you through this, I'm just going to take you through the actual platform, and we're going to have a bit of a look at exactly what's going on. So here is the platform. I'm going to get my face off the screen so that you can actually see everything you need to see about the platform. It's the Australian Mutual Funds Exchange. You have access to all funds. And I'm just going to pull this up. So this is my demo account that I used to log into. Have a flick down. These are all managed mutual funds all the way through down here. And you can see the performances behind them. I've got my watch list and what sits on my watch list. So Alan Gray, big fan of them locally. And I'll show you just some other things about how to get in there. And then there's other investments and things that are there too. Now let's have a look at this. The filters. I want to have a look at the filters. You can filter this by anything you really want. So let's have a look at where it's domiciled, which is good. What I also want to do, let's have a look at total return and consistent return. So let's see if we can pull up some bits and pieces here. So this is over on the side here. Yep, I've just talked about India for this long. I may as well back myself and invest in India. And you can too. So what I'm also choosing here is one with a really high consistent return, and also one with a really high total return as well. So I like consistency of return, and I like a good total return going on there too. So we've got it's a growth mutual fund. We've also got an infrastructure fund. Now I mentioned infrastructure before, so let's go ahead and let's bring this up. I'm going to view the info. So we're going to go into this mutual fund and see what we can pull up here. Over the year to date, look at exactly what it's done. It's phenomenal. It's gone from 100, I believe that's in rupee, INR. Yep, it's gone from 100 up to 120. Just incredible. Look at it over the last 3 years and see exactly just the way that it's gone. Just brilliant. It has. It tells you over here also where they are, how it started, how much is under management as well, who the funder is, and the fund family that is there as well. The overview, exactly what it is that they do. The objective of the scheme is to generate capital appreciation, income distribution, blah, 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 blah. Okay, it tells you what the fund does. Now we've got a quality analysis under here as well, telling you how it's matched up against various benchmarks that have been put together in the system. Also tells you what they hold here as well. All the details that you want to know. To get these details, I'm going to put my face back on here as well, because this is important. Something that's frustrated me as an investment manager for years. To get the details like this, you've got to go to the individual site mostly and pull these details out of somewhere if you can find them. Look through a PDS and look through bits and pieces. Most of the time, what you want to do is you've got an idea, you want to back it, you just want to know, is it a big enough fund, who's running the fund, what their performance has been in the past, what they're holding, those sorts of things. That's all here. To get that, if you want to compare a whole bunch of different funds, and so which one are we going to go into, you have to go to a whole bunch of different websites and pull all that detail together. It's really hard to do. I'll get my face back off. Thank you. So, yes, it shows, and it's also got things like Sharpe ratio. So this is really sort of more the complex idea with how to check quality, how to check growth, how to check consistency of growth, risk as well, tracking error, things that are all the way through there. Now, here's this cool one. Add to comparison. It's just been added to the comparison. Now, let's go back to the all funds here. Now, that was the infrastructure fund. Let's go and find a different one and see if we can pull something up here. The opportunities fund. Here we go. Okay. Now, same deal. Let's go and look. It's probably going to be in a whole bunch of different things. Yep, probably is. Oil and gas, some bits and pieces that's there. I'm not going to go into this again because you've already seen how cool it is that we have all this data that's here. I'm going to add to the comparison. Let's go and have a look at the comparison. Let's compare the pair. Both got a fairly high risk reward. You can see next to each other, yes, they're both Indian currencies. Minimum investment, AUD 108. Great. You can get into it quite cheaply to be able to access these things. Just go in and out and put in more, who the administrator is, holdings, put the holdings next to each other, completely different. Okay, but I didn't choose these as actual investment case, but you can see exactly what it is. You know what? I like the opportunities fund. Fantastic. Invest. Right, minimum required amount to go into that is AUD 2,618. Make a minimum deposit of that. You just go bang, deposit, it'll bring it up, put it into Westpac Bank, and then you can invest however you want to do. Like I said, we're 100% hedged. I'll show my face again. We're 100% hedged, so we'll own the entire thing in the background. So we're not at risk of collapsing because there's no leverage, and we're not taking any risk with anyone's money. And it's a 1-for-1. So if it goes up 1%, you go up 1%. Same in the other direction. That's a great way of getting access to it. It's really more for the in-out that you want to do. Short amount of trading. Yes, I think that Indian infrastructure is a good way of going about it. That's sort of how you'd be able to charge into it. So that's the platform. This is the Australian Mutual Funds Exchange platform with the investment case that we had for India as well. I'm just going to, I hope that I was able to. Now, if you've got any questions with that AMFEX, it's all on the website, and all click on the links and everything that's there. There'll be a flashy video that comes on automatically straight after this. It's really cool. Some guys spent some time on it, but it also shows you sort of exactly the details of the platform and how it works, and have a bit of a look. If you want to get involved, send me a message. I'll be able to help you out. A lot of people are appreciating the app, and also just being able to use it just to go in and out of things really simply anywhere else in the world too, not just India. But I hope that this has helped sort of open people's minds to the investment in India as an emerging market and as a bigger part of that emerging market pie. And I hope that also we've been able to provide you with the tools that you have to be able to get into there, because there's no way to just go straight from your trading platform and just to be able to buy an Indian equity. You would have to do it through some other way, or do it through this way. And this is sort of one of those alternatives that you have. So thank you very much for joining me. Have yourself a great day or a great night, or wherever you're doing when you're watching this. And I'll talk to you soon. My name is James Whelan, Managing Director of the Australian Mutual Funds Exchange. Have yourself a good day.